Welcome everyone. Late night stream चल नहीं रहा ये. Okay, let's just watch Roger.
We about to close.
Being a member of Market Fluidity, you get to participate in the session breakdown recaps. What that basically means is whenever there's a session ending, especially the New York session, we do a little bit of a recap. What that means is that whenever someone trades or you take a loss, it's really important to see that how could you have made that loss better? Was this something you missed? Was this something you ignored? So when we do
So how do we know that the gap is going to get filled, right? So this is the 1 hour time frame. We are at 1848. Let's take a look to the left hand side. Looking to the left, you see this is where the resistance was, 1848, 1849, 1850. If price stays above 1850, that means the gap is not going to get filled. If we stay below 1848, 1849, then that means there's a very high probability for the gap to get filled. So that's how you know. So we gotta wait. So how do we know that the gap is... What's up everyone? This is the easiest setup when you're reading candles. Now this is from the market fluidity basics, because the whole concept of market fluidity is that once you recognize a setup, you should immediately be able to execute on it. So take a look at this, right? Now essentially we were moving up on gold, right? We were moving up, we created resistance. Now this is a 1 hour time frame. The idea is that as far as we create a bullish candle, this means the support is formed. So once the support was formed, we measured the distance between the resistance and the entry point, which is right here. This was about 25 pips. So since we formed support, what's the probability in this uptrend that we will retest this resistance? The probability is always high, 70 to 80% probability we will continue to go up. So took a buy, price came up, secured profits. This was the trade right here. Secured profits because we were at resistance. Then what happened later? Price continued to push up, right? But the whole thing is you won't be able to catch the whole move, but focus on catching the portion of the move with a high probability. What's up everyone? This is the easiest setup when you're reading candles. Now this is from the market fluidity basics, because the whole concept of market fluidity...
Why it's not working? Backtest working
is that once you recognize a setup, you should immediately be able to execute on it. So take a look at this, right? Now essentially we were moving up on gold, right? We were moving up, we created resistance. Now this is a 1 hour time frame. The idea is that as far as we create a bullish candle, this means the support is formed. So once the support was formed, we measured the distance between the resistance and the entry point, which is right here. This was about 25 pips. So since we formed support, what's the probability in this uptrend that we will retest this resistance? The probability is always high, 70 to 80% probability we will continue to go up. So took a buy, price came up, secured profits. This was the trade right here. Secured profits because we were at resistance. Then what happened later? Price continued to push up, right? But the whole thing is you won't be able to catch the whole move, but focus on catching the portion of the move with a high probability. This is the time when someone woke up, got like 40 pips, okay, awesome. And then we started to come into pre-London session. Look at pre-London session sells for gold, came in, gold sells came in, pre-London session, gold sells came in. That's my sells, made $43, I'm rich now. And then we had the dumps come in for pound yen over here. Look at that. 4-digit club. We continue moving. Pound yen and gold continuing down and catching it all. You know, it's not about signals, it's about learning. Price moved up, but this is not an uptrend. This is where price is consolidating, and obviously the way the candles are forming,
we cannot do full analysis here. So let's switch to the 15-minute where we have some sort of a market structure. By the way, this is the Dominion funding platform, broker-backed prop firm. Look at the spreads over here, 0.8. Let's get back here. Now, on the 15-minute, we have market structure. If you remember, on the 30-minute, there was no market structure. On the 15-minute now, we have solid market structure. At this point, all you have to do is you have to wait to see whether we can break below this price, 26.53, because if we do break below this price, you have a 57 to 58 pip range for price to move down. Right now, one thing I want to really explain to you is that on the 30-minute, sometimes when candles will form with wicks, this is bad market structure. 15-minute, this is good market structure. In this case, you can look at the 15-minute. Normally we say don't look at the 15-minute. In this way, you can. So it's always a way you can bend the rules a little bit, but also keeping logic in mind, because price action is always king. Happy New Year, guys, 2025. Now, obviously we are in a downtrend. The 30-minute candle, some of you may want to take a sell over here, because when you look at the range, you're like, okay, there's like a 48 pip range for price to move down. But what if I told you that's a bad idea? And let me tell you why. Because now when we investigate this on the 15-minute time frame, we can see how the 15-minute candles are basically consolidating, printing side by side. So you need a 15-minute candle to break below this wick and then to continue pushing down in this 40 to 41 pip range, because like look how much clean candles we have here to the left hand side. At the same time, if someone's looking for buys, my advice is going to be maybe look for a buy above 26.35, because if you look at this zone over here on the 30-minute, this is just a wick. But if you look on the 15-minute, this is where you have proper market structure. And even if price breaks and closes above, what's this price, 26.35, you have a 30 pip range till this minor resistance, and then you have an 80 pip range all the way going up. So whenever you have wicks on the higher time frame, let's say the 30-minute time frame or the 1 hour time frame, it's always a good idea to look at the smaller time frames to see if there's some market structure and can you really play with that market structure or not. So price action, candlesticks, make it your mission to understand simple price action. This is going to help you in 2025. My students, pay attention here today. So if you've been looking at buys on gold, this is gold 30-minute time frame. If you've been looking at buys and you have missed the move like I have, this is what you have to do now. You have to have no FOMO. The best way to do it to measure how much we've moved. So we moved about 100 pips at this point. If we have moved 100 pips and we have missed this move, this is what you have to do. My favorite way to tackle this would be to wait to see if we can create some sort of a market structure, right? So what I mean by that is we're moving bullish at this point. We have to wait to see if we can come down. So let's say we're going to have a bearish candle. And after the bearish candle, let's say we create a bullish candle. Now we have a support formed. If you got a support formed, now you know price can continue to push up. Don't ask me how I got that level. I looked to the left. If you look to the left, you're going to get the same level. Or if we break this support, then we can continue to push down in this range. So if you've missed the move, that's totally fine. Wait for price to create market structure and then decide where price is going to go from right over here. So this is only you'll be able to understand if you focus on candles and market structure. At this point before NFP, but the biggest problem traders have is to identify how to battle this wick, and you got support down over here. So let me show you. But by the way, before, this is the Dominion funding platform with a 1 pip spread, the only prop firm that's backed by a broker with a raw ECN spread. Now, back to right over here. You have a wick, right? Now on the smaller time frame, this is going to be market structure. Let me switch to the 15-minute. Now on the 15-minute, you can see that this is the support that you have at this point right here. Now, the best way to identify it and the best way to tackle this issue is to actually wait to see whether a candle will break and close above this area, because if we can break and close above this area, I think you have a very, very good range up till 26.84 for price to move up. The other thing you have to identify is that what is a range that is not a tradable range? I would say this entire range between 2680 and 2674, this 60 pip range, non-tradable range. You have rejection, right? So the best way to look for a sell as well would be to wait to see if you can get a candle to break and close below, or for a buy,
we're breaking up over here for price to break and close above for price to move up. That's it. You got to study price action, you got to study candles, see how they form, and that's where your profitability will come in. Today I'm going to teach you session trend, right? Session trend. Session trend is where price moves within a session. So you can look at this move right over here. Let's say, for example, in this session, you were waiting to take a buy, and now price has already moved up to where you wanted to take profit. Now this is an 81 pip range, right? Before we talk about session trend, this is the Dominion funding platform backed by Dominion Markets. Look at spread 1.4, 1.3, the lowest spread in the industry, Dominion funding. Now, before you attempt to look at this, you've missed the move, you plot your support, you plot your resistance, and now you see, okay, where's the price headed now? Obviously, session trend is bullish at this point, which we have right over here. What you need to do is this. You need to wait for market structure. Now, either you can wait for price to create a resistance. If we create this resistance, now you have this clean range where price can continue to push down in any session where you have volume. It could be like pre-New York, NYC Open, London Close, whatever. If we create resistance and this candle does not break this low and starts to break above this wick, now you can say with volume we can continue to push up, but it becomes risky, right? Buying is risky. Why? Because you have rejections, consolidation. Selling is not risky. Why? Because look what you got here to the left hand side. You have clean range. So identify which trades will be easier, which trades. Today I'm going to teach you session trend, right? Session trend. So every day market gives us some opportunities, and every day market gives us some sort of a different setups every time. Now, it's our job to identify what's going to be the best setup for us. So let me show you this right over here. Now, for example, let's say price has already moved down, no problem. Now, you have a 30-minute support, and you have a 30-minute support right down over here. Now you have to identify that, okay, is this a valid sell? If I measure this range, this is a 29, 30 pip range. I don't think it's a good idea. What I want to do is, in my case, I would want to see if we can reject this area over here or create some sort of a support, because if we can create some support right here with the candle closing bullish, you have all this range that we can fill for price to move up. Because if you're looking for a sell here, I'm not confident with the sell. I wouldn't want to execute a sell right over here. So in this scenario, I will only be looking at buys. Now, if you are uncertain about buys within this range, the next best thing to do is to basically wait to see if price can break above 27.65. So you have this beautiful 60 pip range, because if you look to the left hand side, look at this clean range here to the left hand side. So now you have to decide, what are you going to do? Are you going to wait for a confirmation within this range for a buy, or wait for above over here? Sells, I'm not interested for sales. So trading is all about waiting of what you. So every day market. So gold has moved about 170 pips at this point. Now, what do we do at this point? Very, very simple. We start to plot our zones. Let me show you how. Now, first of all, we have a resistance right up over here, and then our support is right here. One thing I want you to understand is that there's a wick rejection on the 30-minute time frame. We have to look on the 15-minute to see what this really is. By the way, this is the Dominion funding platform backed by Dominion Markets. Show them the spread here on gold over here. 1.1 pip spread on Dominion funding. Amazing. Now, let's go back here. Looking at the 15-minute time frame, we can see that, okay, this is maybe some sort of a market structure right here. Now, you got your range. This is a, 65 pip range. Now, it's very easy. If price breaks below 27.71, you're looking at a 56, 57 pip drop. But if we break above 27.78, you're looking at about a 63 pip further bullish move. Don't ask me how I got the blue line. Look to the left hand side and you're going to see exactly where I got it. Now, when we go back to a 30-minute time frame, this is all what we're looking at. We're basically in this zone, and all we got to do is wait for price to either break below 27.71 to push down 100 pips, or to break above 27.78 to 27.85, 67 pips. Now,
Price action here in trading, you just have to wait. You wait for confirmation, execute, and you're gonna have a profitable day. Normally, you look at the 30-minute time frame for confirmation, then to do analysis, but in this case, we're gonna look at the 15-minute. The reason why, I'll tell you right now. Look, the 15-minute time frame has moved about 120 pips at this point. By the way, this is the Dominion Markets platform, right? 120 pips. Now, in this case, since we have a 120 pip range, we have to wait for some sort of a confirmation, some sort of a market structure, because if price has moved up and you have missed this move, now you have to wait for some structure to form. A structure to form, which I want to see, is for price to retrace, create some support. Once the support is formed, then we can look for a buy for price to push up towards 2800, which is a psychological number. If we break above this area, then we can continue to push up all the way higher over there. But I'm not going to look for sells. The only way I'm going to look for sells is if we create support and then we break support, then I'm going to be looking for sells. But this time, I'm not looking for buys, I'm not looking for sells, I'm waiting for market structure. Wait for market structure, wait for your confirmation, and you're going to have a very healthy, confident trade. Take care. Normally, you have price action like this, there's a lot of confusion. You had to take this trade, it's already gone, now you're confused, right? So whenever something like this happens, it's always a good idea to switch over to the 1 hour time frame. Now, when we look at the structure on the 1 hour time frame, the one thing we can take a look at is that, okay, we have a resistance right around 2873. So if you got a resistance around 2873 and you look to the left-hand side, we have clean range of about 85, 86 pips. But the challenge is this, a lot of traders have this problem with patience. Will you be able to wait for price to break above this area to continue to push up? There's another problem we have right over here. This price action has just problems, right? On the 30-minute time frame, you have a little bit of consolidation. So someone can say, hey, Raja, aren't you afraid of this rejection here to the left-hand side? And I'm going to say this, that if you do break above 2872, you have to trust volume to continue pushing price up. Without volume, we don't break zones, we don't break levels, we don't reach targets at all. So at the end of the day, selling, very difficult, confusion. For buying, have to wait and trust volume. How to look at charts when you have high volatile news events like CPI happening. Now, you have to understand with high volatile news events, you don't have to trade that news, but if you want to anticipate, you have to see that, okay, which is the zone where price can come into. This is the 1 hour time frame on Dominion Market C-Trade platform. Now, if we do break below 2878, you have a 150 pips plus range where price can move in. For sells, for buys, we have to look at the 1 hour time frame here at the technical level, and this is the resistance we have on the 1 hour at 2894. If we move bullish with CPI, you need to see how big this range is. This is 120 pips range within this area right over here, right? On 1 hour, looks perfect with news. Now, if you want to look at the 30-minute time frame, you see there's a bit of a mess. So the only way price can go past this rejection, this resistance, is if you have volume in the market. That's going to come with news. Now, people ask me, should I trade news or not? Don't trade news, because it's gambling, it's very risky. If you really want to trade the CPI day, look for 30 minutes after the news happens, or look at maybe NYSE open. But in the same way, be safe on news days, man. Save your money, because it's risky, it's lots of volatility, and you can lose a lot. Okay, so be safe. How to look at, show you how to navigate through rejection areas where you're looking at price action, especially when we're looking right over here and gold is trying to make all-time highs. Take a look at this. What I would do is I would wait to see if we can get a candle to break and close above 29.19, because if we can get this break and close, oh, by the way, this is the Dominion funding platform. Look at the spread, 1.5 pip spread, 1.1, 1.5 back by Dominion Market. So I'd wait for a candle to break and close above this area, because now I know I have this range for price to fill into. That's what I would want. If I'm looking for sells, it'll be a little bit difficult because of rejection. So we're gonna ignore the sell. So if you do take a buy, wait for confirmation, you're looking at about a 41, 42 pip range. If you don't like this buy, look at the 1 hour time frame right over here. All you need on the 1 hour time frame is for a candle to break and close above 29.20, and then anticipate the 4 hour to continue pushing up till 29.34, 130 pips away.
So these are buys which I would like to wait for to have some sort of a confirmation, especially on the 1 hour time frame. I think that's going to be best for me. For sells, it's going to be a little bit difficult, probably below. You're looking at 29.10 for price to move down, so we'll see what happens. But at the end of the day, you have to look at all the time frames, and you have to combine these time frames to come to a substantiated trading outcome, which will work best for you. So take care. We got New York bank holiday, but at the same time, look, we're creating a resistance right over here. Now, bank holiday doesn't necessarily mean there's going to be no volume. Sometimes there is volume, right? So this is the 30-minute time frame. By the way, this is the Dominion funding platform. Take a look at these spreads. Show them the spreads over here. Gold, 1 pip spread. Euro USD, 0.1, 0.3. Pound, yen, USD yen, 0.2. This is why you got to go with a firm that's backed by a broker. But anyway, look. So on the 30-minute time frame, we need a candle to break and close above 29.04, 29.05, and you have clean range here to the left hand side for as many pips as you want. But since we have a rejection here, let's take a look at that on the 15-minute time frame. And now we have some more information. Now look, on the 15-minute time frame, this is what we got. We need a candle to break and close below 28.97. So number one, we can fill this wick, 23 pips, and then continue pushing down to 28.89, 76 pips away. So the key is to understand what wick rejections mean. Now on the 30-minute, we just had a wick. When we looked at the 15-minute, we now have market structure. So even though we have bank holiday, there can be sometimes volume, but in this case right over here, I'd like to wait for price to either break above or break below. So wait for candles to form something which you can identify and execute with confidence. So we've made higher highs at 29.55 and now price is coming down. So you got to know, okay, where can we go from there? Now, right now we're just consolidating, right? We see this zone right over here. Look, a bearish candle, bullish candle. We moved up. This is a support. Let's investigate the 15-minute. But before I do that, I want to make a zone right over here as well, which I will explain to you here later on in the video. Looking at the 15-minute now, right? Now look, this is on the 15-minute time frame. Looking to the left-hand side, what do you see? We see that there's a support, and now you have another support. Let's put it right down over here. Now, if we measure this, this is a 41, 42 pip range, but you have a rejection, and you have some sort of minor rejection right over there. Now, if I showed you that, okay, if you wait for a little bit, and if you wait for price to break below 29.43, you're looking at a range which is cleaner and bigger. 40 pip. Look how clean this range is versus this range right over here. What if we break the all-time high? Then we're going to talk about that. But here we're only talking about the differentiation between two ranges. Now you got to ask yourself: is this an easier range to trade, or is this an easier range to trade? For me, this will be easier range because we have clean range here to the left hand side. So always, whenever you're looking at price action, ask yourself, what is an easier range, or what's an easier buy? So buy or sell, and you just gotta wait. If price doesn't happen to move while you're waiting, so be it. That's the way the market works. Okay, take care. So we've made higher highs at 29.55, and now price is coming down. So you gotta know, okay, where can we go from there? Now, right now we're just consolidating, right? We see this zone right over here. Look. So I'm going to tell you what to do in this manner when you have consolidation happening and you have a wick right over here, and I'm going to tell you exactly how to read the 15-minute time frame when you have situations like this. Now, for the 30-minute, it's easy. You can get a candle to break in, close above 29.42, and looking to the left, we have a lot of range, 77 and 76 pip range for price to move up. That's for buys because price can either break up or break down. Now, if we look on the 15-minute, now you're going to see more market structure. Look, we have this support now at this point. And if we measure this range, this is a 70 pip range. But at the same time, we have this wick here to the left-hand side, right? So what I would want to do is I would want to see if I can get a candle to break and close below this area, because if the candle is open within this vicinity, it can reject because this candle rejected here before as well. So it's important you see a candle to break and close. That's a confirmation for the next candle to continue to push down as you have this amazing range here to the left hand side. So in this manner, buys, clean range. For sells, you have to be wary of this wick, and that's how price action works. Hope this helps. Good luck. So I'm going to tell you
what to do in this manner. I'm going to tell you how to take a counter trend trade, because now we can see how the candles have been pushing up, bullish, almost like 100 pips we've moved up. But before you even look for a counter trend trade, I want you to focus on this, right? Look how big this candle was. This was smaller body, smaller by small body. So as we're coming up towards the resistance, the candle bodies are getting smaller. So what you want to do to take a counter trend trade is now, apart from that, Dominion funding, we're running a Dominion challenge on $50,000 account. The coupon is in description. But look, once we create support, and if we break support, this will be my confirmation for price to continue to push down, because we're moving up. The only way you can take a counter trend trade is if we break support. But if we break above this candle high, that would be an impulse entry and trend more in Market Future University. So at the end of the day, if you have trends coming up like this, just don't take a buy because they're moving up. Best way to look for a counter trend trade, or just wait for some sort of market structure to form. You keep this in mind and you're going to be a well-informed trader. Good luck. This is a price action from yesterday. I missed out on this opportunity as price broke down, so I'm just going to play it out. By the way, this is the simulator I got from Dominion Markets when I opened up the MT5 account. Now look, so I'm going to wait for candle to break below the low. As it's broken below the low, this is where I should have entered yesterday, but I'm just playing it out now. That's it. I'm just playing it out. I'm going to move my stuff. Stop loss goes up over here, accept, and I'm just going to play it out. That's all what I'm doing, because I have to test this. Testing is important. We have clean range show left and side. Price really moves. You can look at it. Yesterday, this was the price action. And look how price would have moved like this. And if I look at my trade panel, you can see this was 34 pips. So Dominion Markets, man, this is the only platform. You open an account, you're getting this MT5 simulator because we care about value, right? Because with value, you're going to be a much more informed trader, educated trader. So you know what to do. Learn price action. This will make your life way easier. Take care. I'm going to show you how to look for a market structure trade and how to look for a wick fill right over here there to the left hand side. The first thing you want to do is you want to measure the ranges, right? So if I measure from 30.25 all the way down over here, this is a 74, 75 pip range, but you cannot take a sell yet. If I measure how far the wick is, by the way, this is the Dominion Markets platform. Look at the spreads right over there. Amazing. Dominion Markets. Get an MT5 simulator for free with this. Now, if I measure the wick, this is, how big is this? This is a 50 pip range for price to move all the way up. Now, what I want to see is the candle confirmation. What is the candle confirmation? Look, I want to see a candle to break and close below 30.25. So I have all this clean range for price to move down. This is the candle confirmation I want to see. At the same time, for buys, I want a candle to break and close above this area in volume time so that wick here to the left hand side can get filled. Where I don't want to trade, I don't want to trade within this range, this 30.25 till 30.30. This is a 50 pip range of death. I don't want to trade in this range. I want to know whether we have clean ranges here to the left hand side. Look, clean range, and I have a clean range. Don't go in over here. Look for clean ranges, then you're going to be a much more patient trader, and that's how you get, profitable in trading. Because here we're just waiting, and I'm waiting for confirmations. It's like watching paint dry. Okay? Take care. I'm going to show you how to look for a market structure trade and how to look for a wick fill right over here there to the left hand side. So this is not an uptrend. So this is not, I'm going to show you how to look for a market structure. So this is not an uptrend. Even though you see that price has moved up, this is definitely not an uptrend, because price moves in three ways. Either this is going to be an uptrend, this is going to be a downtrend, or this is going to be consolidation. This is consolidation. If this was an uptrend, we would come down, create some sort of a support, and then we would move up. But it didn't happen. All we can see is the candles are printing next to each other. So this is consolidation. Whenever you have consolidation and you get price to close below a support, provided you have clean range here to the left hand side, then you can say, now in this session, we're going to have a downtrend. But if we break above this area, then you can say we're going to have an uptrend. But also you have to wait for a candle to break
and close above. If a candle is just open within this area, you see this wick here to the left hand side? This is a rejection area. So if a candle is still open within this wick rejection, it can still reject and go back in the range. So you have to wait for a candle to close above. So you can say that this candle did what this candle couldn't do, was to close above 192, 900, whatever this price is, and then you have a higher probability of price to continue to push up. So trends, this is not an uptrend, it's consolidation, get it right. So
It is still not working. Yeah. I don't know what happened. Their server is down or something. It's not connected successfully. Okay guys, that was it for today. It's 1 in the morning, 1 a.m. in the morning. So tomorrow I have school as well. So yeah, I'm going. I have to take a nap. Bye bye. See you guys in a stream.